Good morning, students. So today's session will be the relevant cost of labor. It is quite similar to the direct material. Let's take a look. Now, what did we learn about direct material? The relevant cost of direct material is the cash outflow or the lost cash inflow. In direct labor also, relevant cost is cash outflow or the lost cash inflow. The very same thing. No need to learn anything extra. Okay. Now, when is there a cash outflow? When you're paying wages to the laborers, right? So that is a relevant cost. Relevant cost of labor is the direct labor cost paid because that is when the cash outflow takes place. Now, there could be two situations. Situation one, there is spare capacity. Now, what do you mean by spare capacity? Suppose you're running a factory, okay? Do you think that the workers in your factory will have work for 365 days a year? You will have peak seasons and off seasons, right? So in the off season, there might be many workers who are remaining idle. The idle workers is known as the spare capacity. So if you get a new project, okay, and you need labor, so all you need to do is you can just ask the people who are remaining idle to do the new job. No extra payment required. So whenever there is spare capacity, the relevant cost is nil. Why? Because there is no extra cash outflow taking place. The existing workers who are remaining idle are being used for the new job. So the relevant cost is nil because there is no cash outflow taking place. Now, situation two is there is no spare capacity. What do you mean by there is no spare capacity? The existing laborers have work. They are not remaining idle. And we don't have a facility to recruit new laborers from outside. So what do? You ask the existing laborers to stop their work and to come and do the new job, right? Which means that laborers are getting transferred from the old job to the new job. Suppose you are having a cutlet business. Now, all my students used to make fun of me, ma'am, take some other business. Only cutlet business you have. You know, that's the first thing that comes to my mind. It's pretty easy to relate. That is why I've taken that example. Okay. So right now we are doing a cutlet business and we plan to start a French fries business. So we have existing workers in the cutlet business and they do not have spare capacity, which means that they are not remaining idle. And we don't have any facility to recruit new laborers from outside. So what do? We will have to transfer the laborers from the cutlet business to the French fries business. In this situation, what is the relevant cost? Always put in mind, relevant cost is nothing but cash outflow or a lost cash inflow. So first we will take the cash outflow part. Cash outflow is nothing but the direct labor cost paid. Even if they are working in the French fries business, they will not work for free. We will have to pay them salary. We will have to pay them wages. So what is the relevant cost? Relevant cost is the labor cost actually paid to the laborers. Plus, now consider the cutlet business. We don't have workers to do the cutlet business. So what happens? The cutlet business stops and we lose the contribution that we would have got from the cutlet business. So that is a lost cash inflow. The contribution lost from the cutlet business is the relevant cost. So we have two things. One is the labor cost actually paid and the other one is the contribution lost from the existing business. So whenever laborers are transferred, please put in mind that there will be two types of relevant cost. One is the labor cost actually paid and the other one is the contribution lost of the existing business, which had to be stopped. So question number one, 100 hours of skilled labor are needed for a special contract. So we need 100 hours. So let's make a note of it. Required 100 hours for the new contract. The staff are working at full capacity. Full capacity. What do you mean by full capacity? Means nobody is remaining idle, which means that there is no spare capacity. And the workers would have to be taken off production of a different product in order to work on the special contract. What does that mean? Laborers have to be transferred from the existing business to the new business, which means that the existing business will have to be stopped for the time being. So there is transfer of labor. Whenever there is transfer of labor, there are two types of relevant cost. What did we study? The first type is the direct labor cost actually paid. And the second one is the lost contribution of the existing business. Okay, so let's get back to the question. The details of the other product are shown below. So we have a selling price 60 and we have direct material, direct labor, variable overheads. All these three items are variable cost. Okay, so the variable cost totals to 35. And fixed overheads is $15. Now, regarding fixed overheads, never consider it as a relevant cost. Why? Because whatever fixed expenses are incurred now will still be incurred even after your decision. Say factory rent. You're paying factory rent now. You're paying factory rent even after your decision. So there is no incremental cost. We have learned that the basic feature of relevant cost is it should be incremental. So as far as fixed costs are concerned, it is not incremental. It is the same, whatever our decision is. That is why we are ignoring fixed cost altogether and we consider only the lost contribution. So fixed overheads is not relevant. The skilled workers' pay rate would not change regardless of which product they worked on. So which means that the rate of $5 per hour will still be paid for the new contract also. What would be the relevant cost? So we know that relevant cost are two types, the labor cost actually paid and the contribution lost. So what is the labor cost actually paid? For 100 hours at the rate of $5 per hour. So what is the amount? 100 into 5 or $500. That's the first part. And the second part is the contribution lost. What is the formula for contribution? Sales minus variable cost gives you contribution. The sales or the selling price is 60 and the variable cost are three items total together coming to 35. So we have sales at 60 minus variable cost at 35. We get the contribution as $25 per unit. We don't want the contribution in unit because it is the hours that are getting transferred. So find out the contribution per hour. For one unit, how many hours are being taken? 2 hours. Okay. So for 2 hours, the contribution is $25. Okay. So the time taken per unit is 2 hours. So what is the contribution for 1 hour? The contribution per hour is 25 divided by 2 or 12.5 per hour. So for every hour, the existing business is contributing $12.5. And how many hours are we taking? We are taking 100 hours. So what's the total lost contribution? It is 12.5 multiplied by 100. So the lost contribution is 12.5 multiplied by 100 or $1,250. So the total relevant cost is 500 plus 1,250 or $1,750. So this was the only tricky question in direct labor. All the other problems are fairly straightforward. That is, we are recruiting new labor, which means that there is no lost contribution. The only cash outflow that is taking place is the amount paid to the new laborers. So that you can easily understand from the question. Only this is the catch. When laborers are transferred from an existing business to a new business. Okay. In such kind of situations, always take the two types of relevant cost. One is the labor cost actually paid, and the other one is the lost contribution of the existing business. So here we come to an end of the relevant cost of direct labor. If you have understood the concepts well, I request you to click the subscribe and the like button and to share it with people whom you feel will benefit from the video. And if you have any doubts, please post in the comment box below. So thank you and have a nice day.